In this module, we will cover the finance section of your profile. To access this section, you need to first log into your Psychology Today profile account. Then you will click on Edit Profile. And finally, select the Finance tab, which will send you down the page to the Finance section. Here, there are 5 sections for you to edit, including your service fees, a brief note about finances, the payment methods that you accept, any insurances that you take, and your NPI plus professional liability insurance information. Let's quickly go over your service fees. Many therapists have a hard time figuring out how much they want to charge per session. Some might just pick a random number, while others might actually try to make an analysis of the current market rate for counseling services by looking at other therapists' profiles and comparing and averaging out how much they're charging for their service. The issue with either of those strategies is that the number that you come up with does not actually represent what you need to pay off your personal, your business expenses, plus your quarterly taxes. So instead of just guessing or comparing those values, you need to actually be very strategic about using a specific formula to come up with your service fees. First, you want to consider how much you want to earn per year that will actually cover all your expenses and your taxes. Let's say you wanted to earn $100,000. Now, with this amount, I would suggest you add an additional $30,000, as that would represent about 30% of the combined state and federal taxes that you'll be held responsible to pay for when running your practice. By adding that amount, this now pushes your yearly income to $130,000. We then divide your yearly earnings by the number of weeks you want to work per year. To come up with that number, we will start it off with 52 weeks minus the number of weeks for personal time off, including vacation, holidays, and sick leave. Most therapists new to private practice may say that they want to take off 4 weeks, which means that you will be working a 48-week year. So we divide $130,000 by 48 weeks, which gives us a weekly earning value of roughly $2,708.33. We finally take that amount and divide it by the total number of clients you want to see per week. The normal caseload for therapists in private practice is about 20 weekly clients. So we take $2,708.33 divided by 20 clients, which gives us your hourly service fee of $135.41, which you can just round down to $135 per session. Now, if you want your fee to be higher, all you have to do is change up the math. Either increase how much you want to earn per year or decrease how many weeks you want to work or how many clients you want to see on a weekly basis. Once you have your fee, you will simply click on the pencil icon next to the fee section, which will then open a box where you can enter in the fees for both individual and couple sessions. As you can see, I'm personally someone who chooses to keep the same fee for both services. But if you want to charge a higher service fee for one service over the other, all you have to do is multiply your base service fee by 25% and add that value onto your base fee. For example, if your base fee for individual sessions is $135, you then multiply that amount by 25%. This will equal to $33.75, by which you will add that to the base rate of $135, and your couple session fee rate will now be $166.75, or you can just round it up all the way to $170. If you want to offer your services to clients that may not be able to afford your fee, you can select the sliding scale pricing option. For those of you who are unfamiliar with sliding scale, this allows us to ethically offer our services at a reasonable and affordable rate for clients who are low income or can't afford to pay our regular service fee. As a payment option, you can consider using your client's income as a way to determine if they require or are eligible for a sliding scale fee option. For my practice, I created a 50 to 75% reduced sliding scale fee. What this simply means is that I can either offer a client 50% or 75% of a discounted rate based on my sliding scale formula. For some context, my practice is located in Massachusetts, which is one of the top 10 states that is most expensive to live in. For the type of clients that I tend to attract and market to, they have reported to me that they tend to earn over $100,000 a year. Here's a quick pro tip. To learn how much your clients earn, all you have to do is make sure that within your intake form that you include a question about their income. Clients can decide to either put an exact amount per year or choose within the income range that you offer to them. Now, if the clients request a sliding scale and they tell me that their income is within the range of $75,000 to $99,000, then I would offer them a 75% fee rate, which is $250 times 75%, which gives me a fee rate of $187.50. Now, let's say if the client tells me that their income is within the range of $50,000 to $74,000, then I would offer them a 50% fee rate, which is $250 times 50%, which gives me a fee rate of $125. Anything below $50,000 per year, I will simply say that the lowest fee rate I can offer is $125 per session. If by chance a prospective client lets me know that they are unable to actually afford that rate, then what I would do ethically and out of professional courtesy is offer them 3 referrals that they can look into. I have found through coaching therapists is that many of them have an unhealthy money mindset. Money mindset is having a set of beliefs and attitudes about money that drives your decisions about saving, spending, and investing. If you are someone who identifies as risk averse, that means you have the tendency to not want to spend or invest money in something because you are concerned about any losses you might accrue. But if you are risk tolerant, that means you have the tendency to be willing to spend and invest money in things that may offer you a potential upside or profit. By simply enrolling into this course, that means that you are someone who is risk tolerant, simply because you are able to outweigh the benefits of the information that will be shared to you because you are hoping that this information will help you increase your client referrals. If you're still struggling with the amount that you're going to charge clients, or even the sliding scale fee that you have came up with, here's some thoughts that I would recommend you consider. A private practice is a service-based business, regardless if it's part-time and you consider it a hustle, a side gig, or a job. If you are responsible for paying taxes for any services that you offer and payments that you receive, that is an actual business. It's a small business, but it's still a business nonetheless. So just because a client says that they can't afford your fee, even at a sliding scale fee rate, then you can still offer them referrals for other clinicians who can offer them a fee that is within their budget. Just like the bread aisle in your local supermarket, there's something for everyone at different price points. So I would recommend that you do not feel bad for a client's financial circumstance, because they can actually still attend to therapy services at a different price point that is more affordable to what they can afford. Be mindful, you are running a business, not a charity. As a business owner and as a person in the society, you have bills to pay. So if you offer every single client a sliding scale fee or a low rate, you're not going to be able to make enough profit to be able to sustain your business. With that said, after entering in your fee, press the Save button and head to the next finance section, which is the Note of Finances. This section allows you to write a short explanation to prospective clients, no more than 300 characters, about how much you charge and or how you handle insurance and payments. If you're an insurance-based practice, all you're going to do is enter in all the insurances that you accept in that section and any instructions that you need clients to do, especially if they need to verify their benefits. An example would be, please confirm with your insurance if you have an existing deductible that must be paid down first before services are covered. This statement is helpful because it offers instructions to clients on what they must do before they actually schedule a session with you. For those of you who are unfamiliar when it comes to billing insurance claims, a deductible is the amount that the client or the member of that insurance is held responsible of paying down first before the insurance is going to start reimbursing for the services that were rendered. So if a client finds out that they have a deductible, let's say $500, they need to pay down that $500 first before their insurance is actually going to cover for counseling services. All you would need to do is come up with a payment plan for that client so they can pay you. You then enter in that payment amount within your insurance claim to showcase to insurance that they've actually been paying down their deductible. Now, if you're a private pay practitioner, all you're going to do is write in this section that you do not accept insurance, but you do offer super bills that clients can submit to their insurance to get partial payment reimbursement. For those of you who are unaware, a super bill is just a fancy way of saying a medical receipt. This receipt tends to include the client's and your contact information, payments received, the date of service, and medical related information such as the description and billing codes for both the service and diagnosis. A super bill is generated for those clients who have a high tier insurance plan that offers out-of-network benefits, or OON. OON benefits tend to be offered to clients whereby they have the right and the ability to choose a provider who is not within the network of insurance. That type of provider is called an out-of-network provider. These benefits are offered by insurance, which allows clients to submit a claim so they can receive up to 80% of the payments that they made towards services to an out-of-network provider, meaning a provider who is not within the network of that insurance. If a client chooses to use their insurance or can only use their insurance to cover for the cost of services, they will be looking for an in-network provider, meaning someone who is within the network of that insurance. From my experience and understanding, clients who have insurance who also can utilize out-of-network benefits tend to have a high-tier plan that is labeled PPO, also known as Preferred Provider Organization. Medicaid, which is a joint federal and state-funded insurance coverage for anyone identified as limited or low income. Medicare, which is a federally funded insurance coverage for anyone over the age of 65, or commercial insurance, specifically HMO, known as Health Maintenance Organization, are all not eligible for a super bill since those types of insurance coverage do not offer their members with out-of-network or OON benefits. Please understand, with private pay practitioners, if you offer a super bill, you are going to be susceptible to having your records audited by the insurance. Even though you are not enrolled with or paneled with insurance as a private pay practice when offering a super bill, This informs insurance that they're still going to be involved in paying for services. They may not be paying you directly, but they're still reimbursing the client for the services that were rendered to them. So if you don't want to deal with insurance, you need to transition into becoming a self-pay only practice, or also known as a cash pay practice. For self-pay practices, all you would do is offer clients a regular payment receipt or invoice. The difference between a payment receipt and a super bill is that a payment receipt does not include medically related information such as a service or diagnosis information and code. So if you're a self-pay practitioner, here's what I would recommend you write in the note to finances. Counseling services are self-pay only. I do not offer any super bills for out-of-network payment reimbursement. After you complete this, you will then select all the payment methods that you take as well as any insurances that you accept if you're an insurance-based practice. You will then press the Save button and move on to the last section, which is to enter in your NPI, known as your National Provider Identification Number, your malpractice liability insurance information, and the expiration date of your liability coverage. From here, you will press on the pencil icon, which a pop-up will then appear. For those of you who are unaware, an NPI is a unique identification number used for healthcare providers to be able to send information electronically, such as insurance claims. If you don't have an NPI, you can apply for one for free by visiting nppes.cms.hhs.gov and click on the button that says Create and/or Select an account. After entering in your NPI and other information, you will finally press the Save button. At this point, you can now move on to the next module, which I will cover the qualifications section of your profile.